Welcome to another weekly trading analysis video. My name is Khalil. Thank you for joining. We're this week we're looking at December 17th to the 25th. So it's pre-Christmas, and everyone is on the holidays. Most people aren't really looking to trade. They want to spend time with their family, and also not that much news is going on this week. We saw that um, on the 19th we have building permits. And then we have GDP growth, and then we have durable goods, CPI, PCE, things like that. So, um, yeah, so we're not looking for any real movement until later on in the week. Really not until the 22nd. So this week we can see a continual bias from the previous week. So last week we saw that that the rate decision was dovish. So dollar bear, so it's pretty good, pretty bullish for gold. And we're looking to see that continue for the week. This week I did not trade just because it is the holidays. I wanted to spend time with my family, things like that. So I did not take any trades, but I was continuously looking at the charts and looking at opportunities. So it's good to practice certain things like that, taking a breather and practicing self-discipline from the markets. There were optimal trades that I did want to take this week, and being able to not take those trades will help me more in the long term. So to dive into the opportunities for this week. This would be pretty short video. I didn't take anything, but we saw time and time again that gold came, retested in here, broke past this support level. Actually, this resistance level is just a bullish bias, but we see it pushing back down immediately, and so really it was honestly just trading within this candle. You'll typically see that in my videos. I'll say this could be um, a shadow candle, and we're looking for the breakout for here, but I don't really consider that for this case, mainly because it looked like it was just taking liquidity. So I don't look at this as a breakout candle, and although it is occurring at a resistance level, I'm just not looking for this. It's too high of a candle. It's too large of a candle actually, and I just don't feel like this fits the criteria for it. I don't have a specific criteria for it right now, but that's something I do have to work on. But right now, it's a gut feeling that this just isn't something I consider that, and I was right. It broke below, then it broke above. Okay. So continuing to see the markets play out. We could have easily played a 007 here. So we have one. Take this off. 2. And then 3 here. So I can go into why, but this is a trade that I like to take. I like to execute here, stop loss above, and into the nearest support or resistance level. That's usually how I play that level out. So that would have played out pretty simply. So this is what the trade would have probably looked out. It wouldn't have been that good of a risk reward, but it's something for the week. So it would have been actually negative risk reward. But yeah, so that would have played out pretty quickly, and that would have been a nice trade. It's holidays. You give what the market gives you. You take what the market gives you. So I'm not too concerned about that. Not every for my trading experience, not every good trade is going to be 2-to-1, 3-to-1. It really depends on your risk ratio and your win and loss rate. So going into this, you see that we have a bullish bias. You could try to trade here. It would have been a good trade. So this is a counter trend here since we're on a bullish bias. Once it broke from here, we could have seen something like this. Continue to the next one. this would have been too tight of a risk reward. That this trade here to this nearest resistance would have been worth it. And we know it's on a bullish daily. It's on a bullish bias overall. So your trade could have been here and have been a 1-on-1. Either way, it would have been a good trade. To this nearest level here. You know, this is the nearest major one. This was just a minor one, the 15 minutes, and then these were, judging on the size, these were hourly. You know, so seeing that would have been a good trade. You could have just taken that and called it a day. So on a bullish bias from previous last week, it's been simple, straightforward. If you want to get into some shorts, some really quick shorts, you know, you could have done this one here. You have here to this channel, broke down and hit 61%. That's usually what I would like. That's what I really like to play for this one. So counter. So this is a trend line. It broke the trend line since this is support bias. So I broke this. Actually, it was a wedge. So let me go closer. I think this is a wedge. But yeah. So it came here, broke down, retest up here, engulfing. Could have entered here. Yeah. So you could have entered here. And you know, we're not playing to the 100% or anything like that, because this is essentially it's a break of trend line. So I'm not trying to do anything long term since we're on a bullish bias. And yeah, that would have played out here. After this engulfing, it would have went straight down, and it would have been a good trade. You would have been almost well, it would have went back to break even if you would have moved your stop loss to break even. Then you would have gotten taken out. But ultimately, if you would have been really conservative with this trade, you could have took profit at 50%, 38%. You know, you could have been taking multiple. You'd have been taking partial orders here. So yeah, so that would have been a nice trade here. Moving on, go back to the 15-minute. As you see, yeah, so it broke past, went above, came, and then this would be another prime opportunity. If you were looking at the charts, you see that the news came out here for GDP growth. The actual was actually less than the forecast, although it was better than previous. I mean, it pulled for further dollar bears. So once you see that, you know, all this liquidity was generated from taking people out. So most people, if you think about it, most people would have had stop losses. I mean, would have had pending orders here to go to the downside, probably to this, and then they would have had stop losses up here, or maybe somewhere here, somewhere short, and literally that would have just been liquidity. We saw that, you know, this was bad information, and if you were looking at the charts, what I like to do is generally you see that a candle is going to the downside here, and once you see the candle go down like this, I would like to place entries right here. I like to put a pending order right here in case the flip. So in case this was liquidity, that's what I like to do. You know, it's sort of a safe trade. You know, there's greed in the market, so that's what I do. So from here, on the flip, in this case, I saw this could have been liquidity. I saw it drove all the way down here. Once I saw it drove over down here, this would be the entry point right here. So I will put my stop loss there, here, and seeing that the candle at that time, so I would have seen that the candle was going here. So that would have been my stop loss there, and to the next support, and that would have been my trade. And it would have wicked out. It would have went straight there within the 15 minutes. That would have been a very quick trade, 1 to 5 risk reward, 1 to 1.5 risk reward. So it would have been a great trade. Yeah. Other than that, I would say there's one more opportunity for that week. Let me actually do this really quick. Okay. So So that would have been a trade that week. And then once we broke, we saw a triangle forming, and we could have just played this triangle here, going from there to there, and playing the 100%. Here. So seeing that we're at 100%, we saw a break. We know it's a bullish bias. We put it below the level here, and then stops would have been at the 200, and this would have been a beautiful trade here. So as you see in my other video, I have the same concepts all the time. I say the same thing. Break if it's go for the long if it's within the trend, and go for the short term if it's not in the trend. And you can believe that there will be fake outs. You can see it drive here. If it drove and spiked down here, I'll have orders right about above that candle. Like, let's say for this candle right here, all you saw that it just melted. I would have put stops right here because there's greed in the market, and people just want to provide liquidity so that they can continue even during the holidays. And that's what I would have done. And this would have been a beautiful trade for this week. That would have been a really, really good trade. Yeah, and after that, I didn't really see much opportunities this week. I did think about just taking random sells here, but that's not part of our plan, so we didn't take it. That was an impulse thought that I didn't execute, which is good. But it would have played out. But it's always good to not actually take those. So all in all, this week you would have had 3 nice trades with confirmations, and these are just from 2 of them from patterns, 1 from news. And also you saw that the durable goods figures were good. And although they were good, they were not too much in focus. That we just saw that it just continued to rise, even though that the figures were good for US dollar. So the actual is better than forecast, and definitely better than the previous. So yeah, we started pushing, and yeah. So those are trades for this week. This week I didn't lose any. This week, but also didn't get any. So it's a positive overall. So yeah. So we thank you for joining. I look to catch you next time on our next week's analysis for the week of Christmas.